the stock market's going down. The bond market is also going down, which generally in the U.S. was not the case. The stock market and the bond market is supposed to be inverse. And the currency is going down. So you really only see these things in countries that are in kind of bad fiscal and financial shape. Never in the reserve currency of the world, but we're seeing it in our country and the reserve currency of the world. And so it's going to make for a pretty messy situation from what I can see.
Lawrence Leopard starts with a bold claim. Tension is rising between Donald Trump and Federal Reserve Chair Jerome Powell. Trump is clearly frustrated. He wants Powell to cut interest rates and restart money printing. But according to Leard, there may be a deeper strategy behind the scenes. He believes that if the economy crashes hard enough, the Fed will have no choice but to step in with stimulus. Leard calls this the big print, the idea that no matter how high inflation gets, the government will always choose printing money over risking a full-blown depression. If you're finding this content valuable, make sure to like the video, subscribe, and turn on post notifications so you don't miss future updates. We've got plenty more on crypto and the digital asset space, so check out our other videos and share your thoughts in the comments. Every bit of engagement helps us grow. Let's go back to the interview.
We know Trump is very upset with Powell not printing, not dropping rates, etc. And I almost think that Bessent kind of took a different approach to it and just thought to himself, well, if we created the markets, we know that the Fed's third mandate will become relevant and they'll have to print. And so, again, that's the name of my book, The Big Print. I mean, it's coming because, they're in kind of an emerging market-like condition where, the stock market's going down. The bond market is also going down, which generally in the U.S. was not the case. The stock market and the bond market is supposed to be inverse. And the currency is going down. So you really only see these things in countries that are in kind of bad fiscal and financial shape. Never in the reserve currency of the world, but we're seeing it in our country and the reserve currency of the world. And so it's going to make for a pretty messy situation from what I can see. Might be the case that this is one of the times when buying the dip did not or will not make sense. Because he hasn't backed off enough, and more importantly, confidence has really been shaken. And once it's shaken, it can take a while to come back. So I believe we're going to go much lower in the stock market this year, and that's sadly not a good thing for the country, employment, everything. And then it'll put the Fed in the box, and the Fed will have to print money, which we know they'll do because that's better than a depression. But we'll still have an economic downturn, and it'll be combined with a high inflation rate, and that will be pretty unpleasant for a lot of people. Buying Bitcoin, this thing goes down 50% every now and then. So, and a lot of people don't like that, and fine, if you don't like that and you want monetary debasement insurance, buy gold. It doesn't go down 50%. Worst down year is like 20%. But with respect to Bitcoin, yes, you have to have a 5 to 10 to 15-year view. This has to be your long-term core savings. I mean, anyone who's held it for 4 years has always recovered from a drawdown. But I always caution people, they say, how much should I put in Bitcoin? I say, how much would you be willing to have it go down 50% and you wouldn't panic? And you'd say to yourself, oh, this is a good opportunity to buy some, or I'm not going to sell what I have. I know it'll come back. That's the level you want to be at. You want to be at a level where you know that if it has a normal correction, you're going to be okay. And it's interesting. I mean, and people say, well, why should I go through those corrections? Well, because of the upside, because it can go up 10x. So if you can go down 50%, but it can go up 10x, you want to do it. A good comparable, Amazon's been the best performing stock in history, really. It's up 210,000% since inception. But, it had continual pullbacks of 50% all the way through. One of them was 90%. In 08, Amazon went down 90%, peak to trough. And yet it was a good business. It kept growing. And so, and that's the case with Bitcoin. It's a network. It's a monetary network that is growing and will continue to grow, in my opinion. Got 16 years of evidence of that. I don't see anything that's going to change that. And so, yeah, will there be times when it's out of favor and it goes down 30, 40%? Sure, there will be. There have been. But, my view is those are good times to buy, or at a minimum, you just don't sell and you wait because on the next upturn, it'll go higher than it did the last time. And that's been the pattern recurring now for 16 years. Look, I think over time, Bitcoin will steal some of gold's thunder, and that's got to be taken into account. But, gold has been money for 6,000 years, and 8 billion people know that gold is money. And so it's not going to get demonetized overnight. It's just going to lose ground compared to Bitcoin. Bitcoin's going to perform better than gold. But no, I think we'll be on some kind of a gold Bitcoin combo standard for money, for the next 50 years, because they're the only two forms of money that really can't be printed. I mean, gold can kind of be printed because we mine 1.7% of the supply. But Bitcoin, we're down to like 1% left, and that asymptotically is approaching zero in the year 2140. So, yeah, it's Bitcoin is the soundest form of money ever invented. 40 years we've had a deflationary trend, and buying the dip has worked. I mean, now you had to be willing to have some real big downs. I mean, in the dot-com bubble burst, the stock market went down almost 50%. When '08 happened, that went down almost 50%. But if you'd bought at those lows, 5, 6, 7, 8 years later, you'd have felt really good. 2020, we had a 30% dip, but you bought that low and it came right back. So people have been trained to buy these dips. What they're not looking at is that this is a once in 100-year event. This is a sovereign debt crisis. The last set of crises that happened like this is back in the teens and the 20s and the 30s, when we kind of had the same crisis, but it was off the gold standard. And basically it's coming around again. And so, they say it's not different this time, but it is different this time. It all depends on your time scale. But it's a very logical thing, yeah, for people to think, well, hey, for 40 years it's worked. Yeah, this is a little bit painful, but I should buy it and it's going to work again. And I said, no, it's not. I mean, it is going to work again if you can wait 30 years, but 30 years is a long time. I mean, there have been periods of time. If you bought in the peak in 1929, you didn't recover that level until like 1958. So I don't know what 58 from 29 is, but it's
just shy of 30 years.
Yeah, it's a substantial period of years, right? So, and this bubble by several measures is actually more expensive than the 29 market. So I don't see the stock market as being a good place to be. But that doesn't mean, don't sell all your stocks. If you have ones you like and you want to have some of your money, great, fine, do it. But again, diversity, I think, will be your friend. That's the other thing I would say. On all of these things, you never want to go from 0 to 100 or 100 to 0. I mean, none of us know the future for sure. It's all a probability weighted bet. But having some diversity. I mean, if I'm right and stocks don't do well, and you have gold and Bitcoin and they do very well, you're going to feel a lot better than if you had all your money in stocks. You know what I mean? And if I'm wrong and stocks do pretty well and gold and Bitcoin don't do well, you got the stocks that did well, and you didn't do as well in gold and Bitcoin. I mean, there's a beauty to being diversified across a couple of different ideas.
Leopard argues that the U.S. dollar has been artificially strong for years, thanks to its role as the world's reserve currency. This strength has let the U.S. export inflation and run huge trade deficits without much consequence. But now, as global economic imbalances grow, that strategy might be changing. The new play? Devalue the dollar to reset trade imbalances and spark economic growth. Leopard points to a conversation with someone named Bassett, likely an economic insider, and highlights an old Trump tweet, "He who has the gold makes the rules." That, along with subtle signals from monetary officials, hints at something bigger, a potential monetary reset. Could the U.S. be preparing for a return to the gold standard? Or even laying the groundwork for a Bitcoin-backed reserve system? Let's watch more clips from the interview.
One way to help make the situation better is the dollar's been overvalued because it's been the reserve currency, and we've managed to export our inflation to everybody else and live beyond our means. If we were to devalue the dollar substantially, the trade would get much more balanced and things would be much more normal. And so I think dollar devaluation, I mean, in fact, Besant even said this, and Trump has said it, that they want dollar to remain the reserve currency, but that doesn't mean it has to be at the current price that it's at. And so I think they have a very conscious strategy of devaluing the dollar compared to other currencies, and maybe compared to gold, and maybe compared to Bitcoin. And there's even an argument that, with the Bitcoin strategic reserve, and one of the things Besant said that really intrigued me, and then there was a tweet this weekend which intrigued me further. Last summer, Besant said, the monetary system is unbalanced and it's not working properly. And I think he was referring to Triffin's dilemma and being the reserve currency and the problems that caused when it forces you to run a trade deficit. And it seems to me that we're going to need to restructure this at some point in the future, something akin to Brentton Woods, and that was the last monetary conference that they had in 1944. And if that happens, I want to be at the table. Boy, that's interesting. This guy kind of gets it, kind of knows something's got to be done, and maybe is trying to get us there. This weekend, Trump tweeted, he said, "He who has the gold makes the rules." Well, I thought that was kind of interesting. I mean, is it possible they're thinking about taking us toward returning to a gold standard? Is it possible that and I think that would be a good step if they could do it. I think one of the things that would prevent them from doing is I don't think we have all the gold we claimed in Fort Knox. I think there's gold in Fort Knox. I just don't think all of it's still there. I think there was a portion of it which Johnson used. There's a lot of evidence to support this to help with the London gold pool in the 1960s. And so, maybe some of the big gold imports that we're seeing in the United States are actually the government buying it to put it into Fort Knox. But, these are just little clues, but it would not surprise me if, they are thinking about some kind of a monetary reset where gold plays a role. I can't guarantee it, and it's probably not likely, but I don't, these hints they're real. Percent saying reset, Trump saying has the gold makes the rules. My personal view is that going back to gold would be better than fiat, but it would be far worse than going to Bitcoin. And the reason is that I think China and India and Russia and the Middle East, they have a lot of gold, a lot more than we have. And it would advantage them wealth-wise to go back to a gold standard. We have a lot more Bitcoin than anybody else, and we have a lot of the Bitcoin companies and miners operating here, and we have a lot of knowledge in the Bitcoin world. And Bitcoin is, in my opinion, a better form of gold. It's digital gold. It can't be diluted at all. Gold does get diluted. And so I'm with Michael Saylor. If we have gold, we should sell it and use it to buy Bitcoin. And that will put China at a disadvantage compared to us. So whether they're that forward thinking, I just don't know. I can't say. I mean, Loomis has proposed a bill where she said that, we should be buying Bitcoin. And originally I thought, oh, that'll never go anywhere. And yet, what I've heard recently is it's got a better chance of succeeding than a lot of people thought. So we'll just have to see. And what's going to happen, in my view, is if the stock market goes down 30 or 40%, that top 10% is going to feel a lot poorer. And at the margin, they're not going to take the trip. They're not going to buy the car. They're not going to renovate the house. They're not going to do all the things they might have done when their retirement account was growing 20% a year. And now when they see their retirement account is taking a 40% hit, they're going to cut back. And those cutbacks then lead to, okay, well, Ford doesn't need to produce as many cars. So eventually the guy working on the assembly line gets furloughed for a while. So, the thing to keep in mind is it's all interconnected, and it's all happy games when things are going well and you got a bubbling economy and things are growing and the government's spending like crazy. But when that turns around, it can unwind just as fast. And if it was a real bubble, like I believe this was, I call it the everything bubble, then, the unwind can be pretty messy, sadly. But I think that's what we have to look forward to for a while.
Leopard isn't claiming anything with certainty, but he believes the signs are real. Between Triffin's dilemma, America's dollar dominance issues, and its growing debt burden, something has to give. A Brentton Woods-style reset might be closer than we think. He even suggests the U.S. could be quietly rebuilding its gold reserves, pointing to unusual import flows and historical examples, like President Lyndon Johnson tapping Fort Knox to support the London gold pool in the 1960s. Whether or not we return to a full gold standard, the message is clear. Sound money principles are being taken more seriously now than they have in decades. If you're enjoying this breakdown, don't forget to like and subscribe. It really helps the channel grow. See you on next video.